Good morning, good afternoon, good evening, and welcome to the Bull versus Bear Trade Day webinar for Monday, the 28th of February, last day of the month, in here with Steve Miley on the call for TradeDay.com. So, welcome everyone. We're going to go through our usual normal run through in here today. We'll take a look at the calendar, what we've got coming up, not just for the day, remember for the week. On Monday, we do a look at the shape of the week. So, we'll take a look at the major economic data events that we've got anticipated coming up this week. So, we'll run through those. We'll also take a look at the articles from the major news wires in here. So we'll take a look at those. What's impacting markets right here, right now? Clearly, Ukraine, Russia is front and center on the agenda. And then we'll take a look at some charts and see what's going on the chart. So let's kick off with the calendar in here. It's a light calendar for today. Nothing really significant in here. Over late tonight, we do get the RBA interest rate decision and statement in here later tonight, but we get some PMI, the first of the PMI data coming out overnight from China, but really nothing probably is going to impact any of the major markets you guys are trading. Rather than going through the whole calendar in here, what I'm going to do is now, if you go to the trading room, now I'm not going to go to the trading room, if you go here to the trading room where most of our resources lie, that's where you can see my market chartist technical analysis reports, but also on the weekend, because I'm not going to go here now, guys, because if I go here, then you'll hear the webinar's also running in there and we'll get a load of feedback on the webinar, so we don't want that. But you go to the trading room here, the members area, trading room, and then you can go to the where the reports are, and you can download this weekly. So it's called Weekly Recap and Update, and it's got today's date on it, 28th of February. This is going to go out at the weekend or on the Mondays in here, and it gives you a run through of the major macroeconomic and geopolitical developments we've seen in here. So you can see in here recapping what we've seen. So dominated by the shifts from risk off to risk on, Russia, Ukraine, and then sanctions being ramped up, and we've had further sanctions ramping up over the weekend with regard to the SWIFT payment system. So they're having a negative impact on markets at the moment. And then looking forward, looking to what happened to markets. So basically stocks were down and back up again. We had initial push to higher yield pressures ease. We pushed to lower yields. We saw the dollar rally as a safe haven bid. Gold surged higher, then retraced back lower. Oil back above $100, and copper was actually sideways in here. And then looking into this week, what do we have? Well, we've got Fed Chairman Powell is testifying before Congress. We have him on Wednesday alongside the Bank of Canada interest rate decision. I think that's going to be important, Powell, because this is going to be Powell speaking for the first time, I think, since we've had the invasion has actually started, since the conflict broke out. And it'd be interesting to see if there's any kind of shift in tone from the chair of the Fed regarding, he's going to get asked questions as well. Remember, he's testifying in front of Congress, so he will be asked questions, and it'll be interesting to see whether there's any kind of taken into consideration of the potential. Obviously, the Fed are looking, and the global central banks are looking at inflation as a problem, and that's why they've shifted more hawkish since the end of last year through the beginning of this year. And inflationary pressures are still going to be high because we've got upward pressures on energy prices. You see oil flying higher, gas prices are higher. We've seen upward pressures on food prices globally. They continue to push higher, and so and the supply chain issues that had started to right themselves in the wake of the COVID pandemic, that have been improving through the end of last year and beginning this year, and that maybe could have eased some of the inflationary pressures. They could be kicked off again. The supply chain issues could be exacerbated by the Russia-Ukraine conflict. So the central banks will have that in mind, but they will also have in mind that stock markets are getting hit on the downside. That's a negative. Global trade is going to be inevitably negatively impacted by the sanctions and by the events in Ukraine, and so all of that in there means that that's going to put negative pressures on the global economy and national economies as well. So it doesn't mean that it could mean that the Fed and other central banks step back. I'm not saying they're going to become super dovish. I'm not saying they're going to go back to cutting rates or not going to be increasing rates, but they may indicate a more of a dovish tone, a less hawkish tone than the markets are currently anticipating. Okay, so that's going to be interesting from Powell on Wednesday. We also get the Bank of Canada. with their interest rate decision that comes on Wednesday as well. And on the data front, we've got a lot of data. The first week of the month is usually a heavy week for data. So we get market and ISM, so the Institute of Supply Management from the US, manufacturing, service and composite PMI. The manufacturing data released on Tuesday, and then the composite data is released, services and composite released on Thursday. So that's a big set of data in there that we got coming up. We've also got German retail sales, German CPI, and Canadian GDP on Tuesday. We get OPEC a meeting. We get the OPEC Plus meeting on Wednesday. Will OPEC try and step in and increase supply of oil more than anticipated? You know, they're already on a supply increase anyway. They're already ratcheting up supply. Will they increase that even more to offset the fact that we've got these other issues that are causing oil to spike higher, with Brent crude and WTI pushing above $100. So OPEC could react to that, and if OPEC react, then obviously that may take some of the upward pressures on energy prices and energy price inflation. So we have that on Wednesday as well, and then at the end of the week, Friday, is the US non-farm payroll and the whole US employment report. So we've got a really busy week of data, really kicking off Tuesday right the way through Friday. So it's going to be interesting to watch that data as it does develop. Even though data is kind of slightly sidelined by everything that is going on, I still think, given the weight of some of this data, and then particularly the Fed. Powell speaking from the Fed, I think the OPEC meeting is going to be important. The PMI data probably not so important. It will be interesting to see the US employment data. Nearly always has an impact anyway, so we'll certainly be watching for that. So that's what we've got on the data calendar in here. Do check out this weekly reports, say in the trading in here in the trading room, where the technical analysis market chartist reports are. You can grab this weekly update in there and take a little bit more of an in-depth look. So what have we got going into today? What's impacting markets right here, right now? Well, look, European equity indices all lower in here, between 1.5% and 3%, well, 1 to 2. 2.5%, 3% lower in here. That's because of the sanctions. The bigger sanctions in here that we've had with the SWIFT payment system having a negative impact on stocks in here. It's going to impact, obviously, the European economy, the global economy. Certainly the idea is it impacts negatively on the Russian economy. And so those more aggressive sanctions that we've seen in here over the weekend certainly impacting negatively on riskier assets. So we're seeing riskier assets go lower, so stocks going lower. And we've seen the dollar remain strong within the FX space. The dollar is the go-to currency in the moment, alongside the yen. So dollar yen in here is not been particularly impacted in here. So dollar yen's hardly changing here today. But so the dollar and the yen both being sought out as the main safe havens in here. But you see at the moment, dollar up further against the euro again today, and dollar up against the Canadian dollar, and broadly stronger in here. We've also seen gold. So gold in here today, pushing back higher, 1% higher. We'll come to look at that. And crude oil over 4% up on the day, rebounding, having had that very aggressive rally setback and further setback on Friday, but rebounding by 4% up to $95. But we'll come to that shortly. But European stock indices back lower in here, and then US stock indices. We'll go take a look at the futures in here. So where are we? Just going here. Sorry, just 1 second. So you can see in here, futures all pointing lower. 1.5%, 1.25%, 1.25%, and the Nasdaq 1.2%. So between 1 and 1.5% lower. The Dow, the S&P, Nasdaq in here this morning on the back of those sanctions in here. And here's the sanctions that are the driving force in here. So we take a look at a few headlines. Wall Street set to side as Russian sanctions hit world markets. There's the headline from Reuters. In here, global finance grapples with Ukraine crisis as shares slump. So global stocks lower in here because of this. Just out of note as well, while I'm going through here, G7 leaders hold a call with NATO today on Ukraine, 4:15 GMT. Okay, so that'll be interesting. There's also delegations from Russia and from Ukraine meeting in Belarus today. Okay, so the Ukrainian president has already said he doesn't see anything coming from those talks. We're not really holding out too much hope. My personal feelings is I do think that we will get a quicker solution to all of this. And this is just very much my personal feelings, guys. Okay, but from things I've read, from watching interviews with various people in the defense area and strategists, and it seems to me that we could see some kind of negotiation, a ceasefire negotiation. It's not going as well as Putin had hoped, as quickly as he would have hoped. Obviously, markets are obviously down as well because he's mentioned the nuclear option as well. But over the weekend, which is obviously a negative. But and I think that for markets, for riskier assets to get significantly damaged on the downside, the two things that need to happen would be for Russian troops to go towards a NATO country, which you know I really don't see that happening. And if it does happen, then all hell is going to break loose, and we're in a very, very different game then. Or if any kind of nuclear weapon is used on Ukraine, and again, that's not really getting priced into the markets because markets would be significantly lower if we were really expecting that. So those are probably outside chart, very, very unlikely to happen. So, but what's more likely to happen for me, I think, is that you could get. I'm not saying peace break out, but you could get some kind of resolution, maybe a ceasefire in the next days or the next week or so. You could get talks that broker a ceasefire, and then some kind of negotiation to maybe Ukraine commit to not joining NATO or whatever it might be. That could happen quite quickly, and if that happens, we're going to go very quickly back to a risk on theme, back into a risk on environment. But volatility is going to remain high. And just like I want to throw in here right in the middle of the webinar, micros, guys, keep on those micros at the moment. The markets are still jumping around. They're still very volatile in here. And so you want to keep your trading size smaller. The volatility will allow you to still make good profits. So keep the trading size smaller, trading the micros, not the minis. And that way you can always add in on the micros, remember, but you're more able to control your positions with smaller trading size. Just running through a few more articles, 5 things you need to know as you start your day in here. So talks in it. Russia-Ukraine officials are meeting this morning for talks aimed at ending the 4-day-old war. So the president, Zelensky, has said he did not believe much will come of the meeting. But, something could happen. Things are very, very negative in Russia in here at the moment. Stock market's massively lower. The ruble's getting absolutely crushed. And there's also some of the oligarchs are out at the moment, already coming out, not necessarily directly criticizing Putin, but saying the war's not good. There's talk of Roman Abramovich, who's the owner of Chelsea Football Club in the UK, who's one of the oligarchs, is trying to broker a peace deal at the moment. He's speaking with Ukraine, so who knows? So for me, there is real risk that we could get some kind of more peaceful settlement breakout in the next week or two, and maybe sooner than we expected. Okay, so so commodities obviously surging back higher. We've already kind of covered that in here at the moment, and long-term effects of sanctions. Well, BP, there's an interesting one there. So BP as getting rid of its stake in the oil giant Rosneft in here, which is Russian owned. So and taking a hit on that as well. What else we have in here? So stocks, ruble sink as sanctions isolate Russia. We've already kind of covered that in there. And recession is the major. So we spoke about this. Although we spoke about inflation as being a problem, and that's obviously what central banks are going to be focused on. Recession is the major threat for stock markets shaken by war. You get a wealth effect damage. You get confidence getting hit negatively from this, and then it could easily see we could easily see a negative impacts onto the global economy. So will the Fed and other central banks remain on their potentially aggressive rate hiking path if we get a global downturn in the economy, even if inflation fears are there? And we can kind of see that reflected here. This is the CME resource that we've been looking at more recently. And you can see now for the next meeting in the middle of March, 16th of March, for the Fed meeting, this was at something like 60% or below at one point, 60% for or less for a 25 basis point hike, and up to like 40% for a 50 basis point hike, okay, 0.5% interest rate hike, and now we're down to only a 10% chance is being shown in here for that meeting, and that clearly reflects in here concerns about the situation and the fact that the Fed may step away from being as hawkish as they have been more recently. So what does it mean for us with the charts? Well, let's take a look at the charts. First of all, we'll start off on the equity indices. So we've had this. Let's go in here, first of all, to the S&P. So strong rebound, intraday rebound. We spoke about that Thursday. Sell the rumor, buy the fact. We saw the strong rebound when the invasion started. The market turned around within the day. Massive turnaround rebound and a massive surge higher, taking out peaks from Wednesday and Thursday and Tuesday. Back on Friday. Now, despite the setback in here today, look at already a green candle in here today. So the market set back, we've dipped all the way lower down to here, back down towards Friday's lows, and then rebounded already within the day. Taking back a lot of the losses that we've seen already today have been taken back. So these markets, I said, S&P here down about 1% in here at the moment, was down basically 2% at one point early on today, okay, or overnight, and has recovered that already, only down 1%. So still maintaining this recovery theme. And if we step in and look at, say, like an hour 15-minute chart, so there's the market opening up. So there's the Friday close. The market gaps all the way down, significant move lower, spikes lower, kind of maintains, dips lower again. So it wasn't just on the open, it was weak. Tried to rebound and then was weak. And now look, coming all the way back. So through since, overnight last night in here. So, this is like about 10 hours ago, 9 hours ago in here. The market's managed to recoup a lot of the losses, so there we closed all the way up here, closed on the highs on Friday, but we've recouped a lot of those losses and looking, you'd have to say looking bullish, even though we're down on the day, looking bullish, really strong rebound. And if we kind of zoom out in here, there's the rebound all the way from, and look through the trend lines we've been looking at, these various trend lines, that come down all the way here from the middle of February. And we can go bigger picture. I'm going to just zoom out. Actually, we're on got to go to a 1 hour chart in here, and then we'll go from the very top. So what's going to be interesting here is getting rid of all of this old analysis that we've had on the chart. Just clear that off. But what we're going to have in here, we're going to look at the actual trend line that comes right off the top in here. So this is the top from the beginning of the year, from the 4th of January. And it's then from the peak in here, from the 10th of February. And if we extend that one out, look in here. It's a long way off, right? But if we can get back up to like 44.77, I'm not saying that's going to happen today, but we could reverse this much bigger trend line, and that would be a massively bullish statement. If we just step in here, though, you can see, we could easily be back up at the highs in here. And now what we've got down here is almost like a inverse head and shoulders at the bottom. So you've got in here shoulder. So I'll try and highlight this with. So you kind of got like a shoulder there. And then just bear with me here, guys. And you've got like it's like a head here. And then another like shoulder's been built over here. And then the neckline to that, you'd argue, so you got here, 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 you kind of runs almost horizontal across here. There's Friday's high, and then you get that gap back down lower. It's almost like a horizontal neckline through there. So if we take out Friday's high and this peak here, so this peak here is back from the 21st of February. That high is at 43.91 and a quarter, which we just stalled below that, I think, on Friday. 43.84 and a quarter, the high there. 91 and a quarter. If we can get above 85, 43, 85, 90 today, that's an inverse head and shoulders base in here. And that really opens up risk then. We could be challenging the trend line, potentially even today. Now that trend line's up somewhere like 44.75. I do appreciate it's a long way away, but we could be up approaching that trend line. And, it's a similar kind of setup in here. We go look at the daily on the NASDAQ in here. Look, the NASDAQ actually undercut this morning on the open, or overnight on the open, undercut the low there from Friday, and then back, it's a really strong rebound in here. And again, stepping into a 15-minute chart. So you can see the market there gapping lower, undercut Friday's low, and then boom, 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 all the way back up again. So this is all from the buy side for me. And again, in here, if I step out to, I'm not going to go through all the details again, but if I step out in here, you'll see it's like we've got a big inverse head and shoulders again. There's the shoulder, head, and then another shoulder here. You draw an upward slope in here, but above Friday's high, this all looks massively bullish again. I mean, really does look bullish. And I think from the macro side, there is threat. There's real threat of things, from the geopolitical side for, kind of things to improve, for kind of almost peace to break out. It sounds odd, but look, we've got a failure candlestick. Look at Thursday's big failure candlestick. This is oil now, oil on the daily chart. Big failure candlestick on Thursday. Then you get this indecisive doji pattern. Market then rebounds higher, but look, gaps higher. Actually, doesn't quite manage a bull gap, but then pushes higher, then fails. Another, at the moment, this is a very, very, very negative candlestick. We were back up, basically not quite at $100 this overnight in here, up to 99.10. It's a really negative candlestick, yeah. It's a shooting star at the moment. So, highlighting potential for a significant retrace. I wouldn't want to be long in there right now. And look, we're going back down towards the low. Undercut the low of today. This all looks really negative. There's the big gap up. And again in here, look, you've got kind of a topping pattern building here. Potential for a head and shoulders. I mean, it's got to go all the way down here for the head and shoulders, but down through the current low. And the current low for the day is 96.25. This looks really negative again. Looks really negative below the low. 90. No, that's not right. Sorry, get this right. The low here is 94.82. Below 94.82, and we defended it here overnight as well in here. So below 94.82 there would look really negative. So for me, we're back into that risk on environment. Buying stocks and and oil looks like it's about to go roll lower. Let's see how we're looking on gold as well. So gold in here, look, very, very massive spike higher on the Thursday and back lower inside pattern, still obviously inside this massive trading range from Thursday. But again, a rebound and a failure in here this morning, and we step into like a 1 hour chart. There's the rebound and failure. Again, this looks like we said the topping pattern through this line here. The market obviously broke down through that line and back up higher again. Very, very choppy in here. I'd argue there's a little line in here for us to maybe be looking at. This one that runs through here. Let me extend that out. Back down through here let's get rid of this one here. But back down through this line here, obviously we're rallying at the moment, so it's a little tricky. Not as clear cut here on gold, but for oil it certainly looks more negative. In here, gold's trying to rally away from this line. In here, you could put in this more accelerated line as well that comes up from the overnight. So there's the rebound. There's today's rebound and the setback, and then we come off of Friday's low, and then today's low. Back down through there might be your trigger in, or just down through today's low. But I'm not as confident I'm being short in here, but it does feel like we're going back into risk on mode, which is buying stock, selling oil, selling gold. Right, guys, I'm going to wrap it up there. Don't see any questions coming through the chat. Please do fire any questions in you do want to going forward, guys. I'm going to wrap it up there. I'm going to wish you all a great trading day. Stay safe. Take care. I'll be back with you with the bull versus bear webinar tomorrow on Tuesday.